Hi all, and thanks so much for tuning in to the trade setup on BloombergQuint. I'm Niraj Shah, and it promises to be a big day simply because of the clutch of global events that have happened already. Jerome Powell spoke and post his speech, yields shot up. There is also this non-farm payrolls data, which might actually trigger a bit of a movement there too, if not already. And then, of course, oil played its part as well. So lots happened. Just very quickly to the first big news, which was what the yields have done, and this is of course what the US markets did, and came off very, very rapidly in the session yesterday. And mind you, one part reason of this is also what Jerome Powell said and what the market probably expected him to say. Now, in its wisdom, certain quarters of the market believe that Jerome Powell could reiterate some bit of change of stance if there is warranted because of the rising inflation. Powell stuck to his previous comments, essentially reiterated what he had to say, what he has said all this while, which is not bad, by the way, but maybe the market expects him to do something more, as a result of which yields went up above the 1.5 mark yet again, 1.56 as we speak. So therefore, yields moved up, and that led to a bit of a corrective move in the markets. Now, the US futures, the last time I saw, were still trading flat, and as a result of which, both Asia as well as the SGX Nifty are showing deep gashes in the session today. ASX, where our guest would be sitting from, or KOSPI or HSI, name any market in the Asian region, and it's trading with a fair degree of red. And you would see the SGX Nifty having deep gashes as well in the session today. There is no doubt about that. The only point is, can it recover? Somehow, it may or may not be the case. And I'll get to the Indian trade setup in a bit. The other very big important news is what happened to oil. And remember, for 2 days, I've been speaking about this, the OPEC meet and its importance. Let's get in Peter McGuire, who's consented to join us this morning to talk about his thoughts on what he made of the OPEC commentary and what kind of repercussions does this have on oil, which has already rallied quite a bit from its lows. Peter, so good having you. Thanks so much for joining in. Did the decision catch you by surprise as well? And therefore, what's your belief of what happens to the commodity in the near term to the medium term?
Well, good morning, Niraj. Yes, it did surprise me a little bit. And if I go into price first, we're up the best part of nearly 9% in the last 2.5 days, which is just extraordinary move to the upside. So, that Brent and WTI really, ratcheting forward. Brent's got the capacity sometime maybe to hit a 70, and certainly WTI 65, 66. So there's from a price point perspective. OPEC Plus, they shocked the squeeze. The alliance rolls over, output cuts, and we're looking as far as April with minor exceptions. So Saudi Arabia is the big moving beast, and they're going to maintain their 1 million barrel per day unilateral cut. Decide later on gradual phase outs, Niraj. So that's the overarching statement.
Peter, I would love to have your wisdom on what do you think happens in the slightly medium term, because a barrage of opinion comes in which says that a lot of this is supply side led issues, maybe because of the natural events in US as well as OPEC's decision. And once these ease, crude will come off. Now, one, do you agree with this assessment? And even if you do, is it possible to, for lack of a better word, time when all of this could happen?
If we put our mind back to the November 3 election, and really crude started to rocket as soon as we got that announcement as far as Biden being the successful president-elect, crude prices are up the best part of 55% and nearly 60% since then, the latter part of October. So there's the first part. Will they come back? Yes, it's always cyclical. We've just been through an horrendous winter period and COVID and all of that with the Texas situation and crimping as far as supply over in the States. So the OPEC storyline, I don't think changes. The world's awash with oil. No one can tell me that we're running out of oil. The second part is the take up, and this seems to be very, very much China's numbers as far as GDP this year, far greater than what we experienced in 2020. So they've just come out with a 6.5 handle. And naturally, India coming back online, those big consumption numbers. So I feel as though, yes, we will take a little bit of a downdraft out of crude, maybe in around about April or May.
Okay. And Peter, one last question. What's your assessment for the rest of the year? Is it even possible to figure out what range could crude trade in for the rest of the year? Would it be inflationary? or would it come off?
Well, there's the point. I want to see what's happening. We've seen that US yield 10-year really get whacked to the upside. So what's happening as far as US dollar? You know the market's better than anyone, Niraj. We're nearly at 92 handle for that US dollar index. Only a week and a half ago, we were at the best part of 89.5. So it's had a big push up to the upside. What happens with bond rates? What happens as far as US dollar? And where do equities go? So I got 10 months to forecast that. I know one thing, it's going to be volatile, and they're the big swinging movement pieces in the whole chess game. Where does US dollar trade? Where do equities trade? And what happens with bond yields and inflation? So I think it's going to be a wild year for traders.
Okay, Peter. Well, I hear Sydney's lovely at this time of the year, as you said. So we hope that your day is better than how the markets are projecting. But thank you so much for speaking to us.
Thank you, Niraj.
That's Peter McGuire, an expert on commodities, actually even Forex, but today's conversation was more about commodities and oil in particular. And I believe you got a good opinion. So, well, maybe it stays a higher for the foreseeable future until April if Saudi were to react or if the natural situation improves a little bit. Now, Peter made an important point about the dollar index too. That one is at 91.71 from being sub 90 or 90.2 or thereabouts. So expect volatility in the markets. And I don't think we needed even the DXY to tell us that. The trade setup for today is simply about that there will be volatility and the markets are likely to correct and stay lower. Keep in mind, viewers, there are not too many shorts in the system to see any major profit booking for those short positions, and therefore typically what happens is when there are a lot of shorts, if the shorts cover their positions because they are booking profits, it gives a semblance of a base to the market. I doubt that this time around the market has too many short positions, and that's the worry. Tech companies could see a short-term correction due to the global tech rout. I know Indian tech is different, and Infosys, Wipro yesterday, all of have had some news, but I do believe that because of the tech route, there might be some follow-on effect on Indian IT too. Now, oil sensitives are in play because the output caps are not eased as expected, and the discussion that we just had, and therefore watch out for those. And I'll just mention them in a moment because those are amongst the top stocks to watch. Actually, let's talk about the key stocks to monitor in the session today, right? We know that we are going to start off lower, so most things will come off. What are the key newsmakers individually? That's the key question as well, right? So, well, one is Wipro, by virtue of the announcement that they've come out with yesterday. So they've signed an agreement to acquire Capco, which is a global management and technology consulting company, to the BFSI sector. I think that's the play out here for Wipro, that it gives them a big edge on the BFSI side. Now, the point is, and keep in mind that the acquisition is about $1.5 billion. So that's not small by any stretch of imagination. It will strengthen Wipro's positioning in BFSI. The key is there are two forces at play here. The acquisition signals Wipro's intent. Hitherto, Wipro was a laid-back company going around. That's what the market perception was. The last 3-4 quarters, Wipro is changing that perception, and the markets would like that. The problem is this acquisition is earnings dilutive, and therefore there are opposing forces at play which kind of negate the near-term picture, if you will. On an ordinary day, I would have said Wipro will gain. Maybe it could too, but I doubt that will happen today. Max Healthcare, they've approved the opening of the QIP of equity shares. The floor price is at about 190, which is a small discount to the current price, 2.5. Let's see what happens to this one. The oil sensitives, as I said, remain firmly in play, and I would presume that all three would have upsides. Now, keep in mind, HO is a rather small company, so cash stock for the trader. ONGC and Oil India might be the better plays, and ONGC in particular. So it'll be interesting to see what that one does in the session today. There are a couple of stocks that I want to quickly highlight. I'm seeing consistent promoter activity, small activity, but consistent promoter activity. So Deepak Fertilizers, this robust marketing, which is the promoter, consistently acquiring small pieces of shares every second day, every third day. Interestingly, fertilizers are in focus. So do watch out for Deepak Fertilizers. They are also that IPA manufacturer, which is used in sanitizers, by the way. So do watch out for this stock. And very interestingly, Aarti Industries, very robust name. But of late, I've seen the promoters and a particular promoter consistently sell shares, 2,000, 3,000, 5,000. Between Feb 26 and March 3, they've sold about 53,000 shares, lest it appear to be a small number. The stock price is circa 3,000. So that's not a very small number. But yeah, promoters are consistently selling small bits of shares. Maybe just a minor return, maybe nothing really, but do watch out. And some companies that I want to highlight, which had fairly high delivery-based volumes, excuse me, and need to point them out. So a textile name out there, GSP, because Gujarat State Petronet, because of the valuations. I think Motilal came out with a note yesterday, so that one had fairly good delivery-based buying. And sugar is seeing some very good run-up. Balrampur Chini was up at 212. Dwarikesh was up about 36, 37. So all of these stocks are seeing some fairly good upticks. So watch out for the sugar pack as well. So 3 or 4 names that you should keep in mind individually and as a pack, but more importantly, because we are likely to start off lower, expect correction almost across the board. There might be 1 or 2 pockets that might stand out, but let's see. And the global markets might also be weak. Remember, Europe didn't have a very bad day yesterday. So if European markets start off lower, then that might just put that little bit of added pressure. Oil sensitives are, though, the one which might buck the trend today. Thanks so much for tuning into the trade setup. Have a profitable day ahead, and please wear your masks.